computer. All right. We got the team here, Expand Wealth team, Sib and Ed. What's going on, Sib?
How are you?
Oh man, on fire. I leave for Japan, and I leave for Japan actually in about 48 hours.
That's exciting. That's
I'll
exciting.
be gone. I'll be gone very soon. 48 hours. Looking forward to it. For those of you that are joining us, uh, I wouldn't mind if you put in the chat box exactly where you're coming in from. I would love to know where you are coming in from. Where are you tuning in from?
Yeah,
Um,
and feel free to turn your cameras on, guys. Don't be
yeah,
shy.
yeah, we wanna see you. Ed, what's going on?
Doing great, man. Thank you very much. Just looking forward to this presentation. It's been a couple of weeks in the making, and ready to show people what Expanded Wealth is has in store.
Nice, nice. Look, we got people from Calgary, Langley. I'm sure everywhere the weather's nice. I'm looking outside my window. The weather is gorgeous.
It just started raining in Toronto, though. I'm not sure if people are from Toronto, but it just started raining for, it's going to be a couple hours, then it should be good. So, Alfonso, speaking of Toronto, what's going on in the Toronto market? Maybe while we're waiting, you can share what's happening in the Toronto
Yeah,
market with us.
yeah.
And yeah.
Well, there's two big announcements today, and we could talk about that before we get into the presentation. Make sure to mute yourselves, guys. Oh, let me just throw it here as you're coming in. You can mute, mute upon entry. Mute all upon entry. Okay, good. Continue. Yeah, good. BC, a lot of people from BC here said.
Yeah,
So
I wonder if there's anybody from the Eastern Canada.
nice, nice. Yeah, so the one main announcement, and you know what it is. You know what it is, right? So the Bank of Canada decided to hold the rate and keep it at 2.75. And people are up in arms. They're like, how could you? And it might seem like some of the numbers that it might seem like some of the numbers that we're seeing or we're experiencing, right? So we're experiencing, if you're in business, we know that it's things are slowing down. So, based on the Bank of Canada, things things seem to be all right. What does that mean? Well, Q1, it's really a hard, and this is the data that they have to go by. They're going to look at Q1 of 2025, and they're going to see what? Oh, someone's getting on a plane. Wow. Someone's getting on a plane. JJ, where are you going, JJ? Let me see. He's got the ticket right there. I can't see that. Good, 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 good. So, they're looking at Q1, and if you remember back in Q1, there was a threat of these massive tariffs. And in the auto industry, in lumber, all businesses either loaded up or already pre-shipped their goods into the US. So this is giving a false sense of confidence. The numbers don't really reflect the reality of what's happening, but that's what the Bank of Canada has to go by. And so, when the Q2 numbers, Q3 numbers, I think the next rate announcement will be, and correct me if I'm wrong, Sid, July 30th? I think it's July 30th. By that time, I think we'll have the Q2 data, and I'm willing to bet that it's gonna show more of the truth, and there's gonna be not one. We're not gonna go 25 basis points, but we'll probably see 0.50 basis point cut, and heading into towards the end of the summer, maybe 2%. So those are things to take a look at. And Toronto, Seb, you talked about Toronto. Um, you know, we are currently living through a housing crisis. And people are like, how is it possible that we have this housing crisis? People can't, can't find a home, and we're behind on the amount of units we need. But what's going on with Toronto? You got all these empty condos sitting in Toronto. What's going on? Well, these condos, they're not uh, they're not made for affordable housing. And in fact, uh, you know, the cost to build those was so high that not even a bailout could help them. Like let's say the government stepped in and wanted to bail out all of these condos to create housing for people in Canada, they would be at a loss. So, as some of the people here on this call, they already know, I'm a builder, so I'm building currently at about $190,000 a door. That's what it costs me to build one unit. At a loss to buy one of those condos. Let's say the government was to bail out all these Toronto developers and buy it at a loss, that you're looking at $400,000 to $500,000 a unit. There's no way in hell that the government is going to step in and buy these units to rent them out. It just doesn't make sense. And so those condos are going to sit there for a very long time. And there's still a housing crisis, right? So you have empty condos, but people still need housing. And so the types of deals that I do and I've done in my past is pretty much to address the affordability factor. And there is a supply and demand issue right there. And that's kind of the things that we're going to be talking about. We're going to be talking about the passive investing blueprint, and we want people to not get into the speculative types of transactions, get caught up with the hype. The types of deals that we do actually don't depend on what's going to happen in the market. They don't depend on what's going to happen with interest rates. In fact, because we don't focus on the overnight rate Bank of Canada, the types of deals that we do, we're looking at the bond market, and the bond market is going to be trending downwards as well. We're going to be seeing a bond below 2%. So, all to say that these are the best of times. Isn't that right, Sid?
Sorry, I was on mute. No, it's a great time to buy. We're seeing a lot of good deals on the market.
Yes.
We're looking at a lot of great deals, so it's a great time to buy. It's a buyer's market right now, and you want to be buying when there's fear in the market. You don't want to be buying when the prices are high and there's greed in the market. So it's a great time for sure.
For the last little bit, people were greedy. People have been extremely greedy. And so, what we're going to be talking about is how to navigate through passive investing. I mean, passive investing can be fun, passive investing can be lucrative, but don't get into things that are speculative. And that's how people ended up, in that the that all those pre-construction condos. Sib, we met in 2017, correct?
We did. We did.
And you came to one of my events, and since the very beginning, since I started in this industry, 2007, I've always told people to stay away from pre-construction condos because that's speculation. And when you're if the only way you're going to make money in real estate if the price of the real estate goes up in value, you're a speculator. And we want to be investors. And so even as a passive investor, you want to look at multiple different things. You want to look at the operator, the experience of the operator, and what are the deals that they're going to be investing in. And so there have been lots of funds, and some funds have been in trouble because the only way they're going to make money is if that piece of land or that piece of real estate goes up in value. So that's what we're going to be talking about today. We're going to be talking about giving you guys the blueprint to investing passively, brought to you by Wealth Genius, Expand Wealth. Expand Wealth is our real estate investment trust, and we're excited. We have the entire leadership here. Well, not everybody here, but there's three of us here, and we're more than happy to answer your questions. Um, I have to show you the disclaimer that says that, here we're simply sharing with you our experience. We are not advising you in any way. In fact, you should get some legal counsel or connect with investor focused real estate professionals that can help and support you make these types of decisions. Here we're simply sharing our experience with you. So let's get into it because I'm excited about this subject matter. We want to do passive investing the right way, and we're going to be making passive investing great again. Passive investing has been getting a bad rap in the past couple of years, but there's a right way and a wrong way to do it. Again, this is our opinion, but we're going to talk a little bit about passive investing and some of the things that you can do. And I'll talk, I'm going to bring some points, and then Sib as well is going to have a presentation as well. So as you're coming in, I would love it if you introduced yourselves, drop in the chat box exactly where you're coming in from. We love to see that, we got Calgary, Langley, all over BC. We got people from all over, and it's pretty good. It's pretty good. It's a pretty good it's going to be a pretty good event. We got about 25 people here in the room. So, how do you know that passive investing is right for you? Well, this is the time money matrix. And at the very beginning of your journey, you have a lot of time, a lot of discretional time, but you don't have much capital. And as time goes on, as you start to develop your career, you start to jump, income brackets. You've put money away, you've invested. So there's going to come a time where you have a lot of income, but no time, right? And that can be a challenge for some people. So where are you? Where are you? Do you have a lot of time? Do you have do you have no time, but you have the income or capital available? And the beauty about passive investing is that as you invest your time doing other income generating activities, the money that is coming in, you can instantly put it to work. And so your money can start working for you. Warren Buffett said, if you don't figure out a way to make money while you sleep, you'll have to work until you die. And so you want to find ways that your money could be working for you. You received a request to record to the cloud. I think I'm already recording. So why do you need to invest passively, and what are some of the benefits? Well, number one, financial security. You're going to get to a point where you might not want to continue to work actively, and the thing about passive investing is that if you do this the right way, which is it's the ultimate passive activity where you can have your money, all of your money working for you, and then you have all of your time back. And to me, that's what it's all about. It's about that time flexibility to do what you want, when you want, with whom you want, for however long you want, for as long as you want. That's true time flexibility. You do need to start planning for this, even at a young age. The reason I'm where I am today is because I started investing when I was 17 years old. So, I know some of you guys may know a little bit about my backstory, but I started my first business at 17, and I grew that business, to across Canada when I was 21. And I realized that I was very vulnerable in the business. And so I started to think at 21 years old, what am I going to do with my life? How am I going to, live the rest of my days? Do I just want to be working at this business 9 to 9, 7 days a week, or do I want to have some level of an exit? And so I started to invest in real estate for that reason. And alongside the real estate that I was doing, I was also investing passively. So the point is that you're accumulating wealth. You're creating wealth through hard assets, um, different types of investing vehicles, some that don't require your time, and some may require your time. And ultimately, that's going to give you that work-life balance. Beautiful. More people coming in. Welcome, welcome. If you're just coming in, I'd love it if you would write in the chat box, exactly where you're coming in from. We'd love to hear from you. So many types of deals. Um, some people start actively, and when you're young, you may have a lot of energy and you are excited, ready to take on the world, and you're going to do a lot of active deals. This is you putting in all of your time into building a real estate portfolio. Then there's some more turnkey deals, and we would call this passive type deals where maybe you buy turnkey properties with a property manager where you don't have to hear anything from them. Maybe you do some private lending. Maybe you've invested or you're partnered with someone where someone else is managing it, but you are more of a passive investor, but you're still very much involved because that maybe that property has your name on it, and obviously you have a say. Maybe you're not actively in the deal. Maybe there's someone else managing that deal, but you are very much a part of that deal, and it requires bandwidth. Then we go to portfolio type deals. And we're talking about the ultimate passive type of deal. And if you remember the quadrant in Robert Kiyosaki's quadrant, where you have the employee, you got the self-employed, uh, and then on the right-hand side, where it's like a business owner and an investor, the last one being an investor, where your money creates more money. Your money creates more wealth. Your money is working hard for you. And so we're talking about land development, private equity, mutual fund trusts. This is the ultimate passive type deals. And it really depends on where you are, but the objective should be to get into those portfolio deals. You want to be as passive as possible, just like the Robert Kiyosaki quadrant, where the whole point is to become an investor, where your money is making money for you, and now you have all of your time. You can focus on doing things for your church. You can focus on doing things for the charities that you're passionate about, spending more time with your family, doing things that you love. My wife and I, we travel to 11 countries, or we take 11 vacations per year. Usually it's outside of Canada, so we travel to about 11 countries a year. And the only reason we can do this is because our investments are making money for us while we sleep. So whether we get up in the morning or not, our portfolio is working for us, and that's exactly what we want. So let's talk a little bit more about passive, not portfolio type deals, but more passive type deals. Well, the beauty about passive investing is that there's shorter maturity in the investment, so you'll see the full returns sooner. Less time commitment, higher returns, and low effort from the investor. Multiple cash flow streams with no tenants or rentals, and we love that. And the ability to utilize registered funds without collapsing those registered funds. That's a big bonus. We can leverage your registered funds and invest them directly into real estate, yielding a higher return than you would if you were investing into, uh, the money markets, which is where, the majority of people are putting their registered funds. No restriction or need to qualify for any financing. So you don't have to worry about filling out applications for mortgages or whatnot. Your money is directly invested, and that's it. That's all. And it can be done from anywhere. In 48 hours, I'm leaving for Japan. I'll be in Tokyo, Japan, and I'll be there pretty much until the end of the month. And my money is going to be making money. Like while I'm gone, uh, the production doesn't stop. We are still generating income even though I'm gone. And that's the beauty about investing passively. It gives you that ultimate freedom. And it can be structured, and this depending on the investment vehicle that you're using, but it can be structured to help you in terms of tax planning and to minimize some taxable annual revenues, depending on when you're going to get those returns. Now, some of the disadvantages are that the money's locked up, it's not leverageable, you got less control. Obviously, somebody else is doing the work, which just gives you the time, right? That's one of the benefits to investing passively, but it also could be a disadvantage if you want to be in control, have access, be a part of everything. And it can be short term, so depending on your long-term goals, if you're receiving your capital back and then you have to redeploy it, well, sometimes you're going to be working harder and finding places for that money. Then it's like, it's kind of a full-time activity sometimes. So depending on your goals, it can be, when it's short term, then that could impact the long-term goals. Now, private lending, this has been um, this has been a model that most people associate with passive investing. But even though you are passive investing, it does require bandwidth in your mind. And you really, most people want to lend their money, but they don't take the time to educate themselves on the types of deals that they're lending to. And you could find yourself in a situation where someone defaults on the money, or maybe it's the wrong type of deal, something goes wrong on the deal, or there's delays. So these are some of the notes that I want you to take if you are doing any private lending. And I've been doing this for 26 plus years. Um, you need to ask yourself, are you an equity partner? Or are you a lender towards the deal? Is the money secured or not secured? How is your money secured? So, you know, if is it a promissory note? And uh, everybody knows this, and it's been a bit controversial. Our stance, as Wealth Genius, we've always really discouraged people from doing any type of promissory notes. In fact, I have a few rules. If I'm going to lend my money, it has to be secured. It has to be. No questions about it. Number two, if I'm going to lend my money, it needs to be secured against an asset that I'm willing to own. So I'm willing to take over in case something goes wrong. If I'm not willing to take over, I probably am not going to register my money against that asset. For example, there's lots of second mortgages lent privately, registered against a lot of condos in Toronto. Well, that's not a loan that I would have done. I only lend my money to, and one, it has to be secured, and number two, it has to be secured against an asset that I'm willing to own in case something goes wrong. And so I'm going to underwrite that asset. I'm going to underwrite it as if I'm owning it, as if I'm buying it myself. And if I can't make sense of the numbers, I'm not lending on that asset. And so, as a result, from the very beginning, when I started educating, I've always told people, look, uh, don't buy speculative investments, and I really discourage people from doing P notes. And so that's a hard stance because before that's what everybody was doing. So they Alfonso, we love doing P notes and pre-construction condos, and people thought I was crazy. Now, fast forward. we see that the result has not been favorable for the people that have been involved in those types of deals. You always want to get legal counsel for everything. You always want documentation, and you want to have legal counsel for everything. And a big part of what all of this is simply understanding. And you have to learn underwriting. Like you have to learn what you're investing in. And we're talking about specifically private lending. That's exactly what we're talking about because you're so close to you're so close to the product. Ask lots of questions and what are the exits and how long are you going to get your money? And so these are all questions that you need to be asking and things that you need to be thinking about. Again, it comes back to that time money matrix, and it's really about you. Every single individual is going to be different. Some people they have a lot of capital but no time, and so they have to leverage other people's time. And there's people that don't have capital and they got to leverage other people's money. Either way, you got to learn how to do it the right way. The next type of deal is your portfolio type deals. This is the ultimate passive type of deal. And this is exactly what you want to strive towards because, you know, it will free your time. You'll have unlimited time if your money is working for you when you're no longer having to work for the money. And so the beauty about these the beauty about um, the beauty about land development and larger deals is that the average person might not have the ability to invest into some larger deals, and through um, through REITs, through mutual fund trusts, you actually get to participate. So maybe you have a small piece of a watermelon, but it's actually better to have a small piece of a watermelon than to have a big piece of a grape. And so, you get to have equity. You get to partner. You get to have ownership with developers. You get to buy in a group, so you get that bulk discount, and you get the opportunity to invest into large commercial real estate, even though maybe by yourself you don't have that ability. And so because you're tapping into those larger deals, you get the economies of scale. You get to tap into operators that have been doing this for a while. You get to tap into operators that have the experience to make sure they execute on the deals that they have. And that's the beauty of those portfolio type deals. Now, most people, when they invest, they're going to want to invest into those smaller properties because most people tend to invest based on what they can afford. Now, I'm an educator, and I've always educated on the power of multifamily. Not only do you get to tap into the economies of scale, but because you have more customers, think about the single family house. You have all these expenses, but you only have one income. And so when there's a market correction, when anything is going to happen, you're going to see that those smaller properties, those are the ones that get that suffer the most, versus an apartment building that is run efficiently with the right operator. You get to tap into the economies of scale. There's more profits. Things are run more efficient, and it doesn't require your time if you're investing through, for example, a mutual fund trust or a REIT, one like we have ExpandWealth, where we are primarily looking for multifamily. So through uh, through private equity and a fund like what we have, ExpandWealth Fund, you actually get to participate. You are a partner in a larger asset, and it gives you the ability to tap into the economies of scale. And we see where kind of what's going on in the market. We see immigration. One factor that people have not considered and they're not talking about it. But I've talked to a lot of people at customs. They're seeing an uptick in people coming in from the U.S. As you guys know, there's an estimated 20 million illegals in the US, and a lot of those illegals are going to be crossing over into Canada because the new leadership in the US has, made it one of their mandates to deport as many people as possible. A lot of people are scared and they're crossing over, and we're already seeing that a lot of those people are crossing over, and all that needs to happen in Canada is someone needs to be here for about 14 days and they can claim asylum. We have a backlog of roughly about 3 to 4 years of asylum cases, and you're gonna see this 399,000 asylum cases. This will increase. We got 20 million people. You're going to see another million or two claiming asylum here in Canada, and that's going to be a big factor, something to definitely keep an eye on. We see that rent. Now we're talking about in Canada. We're also experiencing in some major markets, obviously the markets that are being hit with um, the markets that are being hit with those pre-construction condos, primarily Vancouver, Calgary, and Toronto. We're seeing a decline in rents, which is fine because those are the markets that we don't invest in. In fact, we are focused on our strategy is a little bit different, and we're definitely more addressing the affordability factor, blue chip type assets, and we love our secondary markets that are supported by major markets. Um, this is a chart that I love. It's a 10-year trend in portfolio allocation for high net worth individuals. And we're seeing that the wealthiest people in the world are transitioning and transferring their capital and their wealth towards private equity, primarily real estate investment trusts, like ExpandWealth. And what's happening is that obviously currencies, if you're holding your money in US currency or in the money markets, there's a lot of volatility. And so what we're seeing that is the high net worth individuals are moving towards hard assets like gold and real estate. And so this is something that you really have to pay attention to because that's where the smart money is going. It's going towards these private equity firms, and there's a very specific reason because they want to tap into the economies of scale as well, but they're trying to keep their money safe. We know that inflation is happening. We there's a lot of uncertainty, and not only is right now the best of times, right now is the best time to get into real estate, but they're going to have to print a lot of money in the upcoming years. And so what's going to happen? Like the money, the value of money is going to be devalued, and you want to be in hard assets during that time. So there's definitely huge benefits uh, in investing into private real estate trusts like the one we have, Expand Wealth. Number one, you got a steady income. You got steady income through dividends, tax efficiencies. You get to diversify your portfolio, access to professional operators, and you get to tap into the experience of professional operators. I've been in this business for 26 plus years as an investor, but I've been in business general for about 30 years. And you get to tap into that experience along with all our partners. We've assembled an ironclad team, and it's different than investing into smaller projects where someone maybe doesn't have the experience. These are blue chip assets. These are solid investments that we're looking to acquire. So it's all about expanding mindset. That's exactly what leveling up really means. You want to level up into larger assets, and again, it's the idea of having a small piece of a large watermelon than having a big piece of a grape. And so it's all about mindset. If you've ever come to one of my events before, you'll see that it's all about mindset. I teach mindset. I came to this country as a refugee. My mom had $30 in her purse, and now to be in a position where we own millions of dollars in assets all across Canada, to me it's like it's the Canadian dream. But you have to have the vision and you have to have the mindset to be able to do this. And for the longest time, people have been telling me, Alfonso, can we participate in your deals? And I just didn't have the right vehicle. Now we're giving people the opportunity to do that. But we have a long history of value add deals and brand new apartment buildings. And now currently I am a builder and we're building apartment buildings and we're excited about everything that we've done and all the deals that we're going to be doing now, since right now is the best time in history to get involved with real estate. And now people can come along with us for that ride. And so this is an example of things that we've done in the past. Brand new apartment buildings. This is a 60-unit apartment building, 14.5 million that we closed in 2022. And there's something about lean and clean. And for us, this is not the type of fund where we're going to get into deals that are risky. Everything that we're doing is lean and clean. These are blue chip type assets. We're building for affordability, not luxury. We're addressing the need in Canada right now, where Canada needs units. We're going through a housing crisis right now, and we simply are going to address that need. We're going to work with what the market is needing right now. The market doesn't need overpriced condos. The market doesn't need overpriced houses and luxury homes and luxury apartment buildings. The market doesn't need that. The market needs affordability. And people that focus on that, there's nothing wrong with that, but you're going to see that a lot of that product will sit on the market for a very long time because people just need a place to live somewhere, and that's exactly what this fund is about. We're just going to address a need. Blue chip assets, good, solid properties that make sense. And so these are the kind of things that we've been building. Every year we do a property tour with a lot of our investors, and they love it. They not only one of the biggest issues is you invest into these private equity firms, these REITs, and you really are disattached from the investment. You don't even know what you're investing in. And so what we're doing is we want to make sure that you can touch and feel and you can get really close and personal with these assets. And so we're going to be doing property tours if you want. You're going to know exactly the types of deals that we're investing in. We're going to send you pictures. You are there investing with us, and this will give you experience because you're connected and you have more access to the owners versus public REITs or public public equity, right? So if you're in the stock market or whatever, you invest in Amazon, well, guess what? You're not going to be talking to Jeff Bezos. I'll tell you that right now. And so this gives you a direct link to what we're doing. And for the first time, people, we have the vehicle now for people to participate with us. This is another 44 unit that we did. This is, me with our partners, is my wife. And this is a 44 unit that we did. And we are actually, so this is before the fund, but right next door to this property. So we just built this. We went to show we did the property tour. We are actually looking at another 40 unit building that is being built, brand new asset that we want to put into the fund, and so that's exciting. This is not 24 units, and so we love this stuff. We love this stuff. We live and breathe real estate. We have a lot of experience combined, and we're looking at adding to the portfolio, and we're looking on bringing everybody along with us on the ride. This is Sib and Sia. You're going to hear Sib very soon, and Sia's not here. But we were walking this property on one of the property tours that we did. So the road to working with us and growing together, it starts now for a lot of you. We just launched our fund, our Expand Wealth Real Estate Fund, and it's exciting. We worked on it actually for about a year and a half, just to make sure that we crossed all our T's and dotted all our I's and make sure that we can offer the very best product in the market. This is actually Sibin and C and I. We had many hours of talking to lawyers and revisions and all of that just to get this fund ready to be not just a fund that someone can invest in, but to be a fund where we definitely differentiate ourselves from what we do and what's happening in the market. So here's your opportunity to connect with us, Expand Wealth Real Estate Fund. You can ask all your questions. You can see what we're doing. You can grow with us. We are looking at a lot of properties, and you get the opportunity to be one of the first 150. We actually have already investors in the fund. We're looking to get to 150 investors, because those first 150 is going to be a special group of people. You can almost say you're almost like one of the founders, and we're gonna show you the some of the perks that you'll get to in becoming the first 150. So grab this QR code and connect with us. This is the executive team, the leadership team, starting with me, the CEO. We have Sibin and Sia, which they've been investing for years, built a multi-million-dollar portfolio. My wife, she's been hands-on with me for we're talking about 12 over 12 years now. Collectively, we have about 100 years in experience, over 100 million plus in a portfolio in assets. Before we even started this Expand Wealth Fund, and now our goal is to build $1 billion portfolio, and everybody on this call will have the opportunity to hit the ground running with us. And not only that, if you're part of the 150, you'll go on property tours with us. We'll be able to work together. And Ed and Denise, Ed is also on the call, Ed and Denise as our partners as well. So we're excited to bring this to you. We launched it at Expand for the very first time, our Expand Investor Conference that happened in May. And I'm excited. For the very first time, people have the opportunity to invest along with me. This is a question that I get on a daily basis. Alfonso, how can I work with you? How can I work with you? How can I work with you? And now we've created the vehicle that people can work with us. Not only that, we all believe in giving. We all believe in giving. We all believe in sharing and giving, and that's why we created the wealth. We're creating wealth so we can be in a position to impact the world, impact people in their lives. We started the Quadro Youth Foundation. Sibit and Sia have charities that they feel strongly about. We started Wealth Genius Gives. We just came back from Sierra Leone, where we're building a school in Sierra Leone, Africa, along with our partners there, Tara from Freedom Tree. And so it's all about creating a social impact, and we want to build that wealth for that reason. So let's talk about the opportunity. Well, we have a minimum investment of 25,000. And when Sib comes on here, he'll talk a little bit more about distributions and the targeted return that we have. But again, these are not uh, land development deals. We are buying existing, newer or value add type deals, but it's all blue chip, turnkey type properties. Uh, that's the entire focus of the fund. Multifamily, things that make sense, things like cash flow, in very specific markets across Canada. Sid will talk about that as well, the key markets that we're going to be focused on. And something that we wanted to do, we wanted to create a situation where our investors are winning, and it has to be a winning opportunity, because our families are invested in this. Sib's mom is invested in this. My mom is going to be invested in this, and so we want to make sure that we create an opportunity for our investors. And so, one of the things that differentiate us is the fact that we have our equity split is 80 towards the capital investors, our limited partners, and 20% for the management. My average deal before we created this fund, was 50-50 splits, or 40-60, 60 going to the investor in order to create an incentive. For the first time ever, we are doing 80-20 splits. So 80% to you, the limited partner, the capital investor. And to me, that was one of the things that blew my mind, that we could do this, we could offer this to our people. That was great. So set up a discovery call. Here's the QR code. You can scan it at any time. Set up a call. You'll connect with Denise, and we'll show you the next steps. These are our partners, and let's build wealth together, guys. Let's build wealth. So I'm going to pass it on to Sib. Sib, how you doing there?
Great, great. Thank you, Alfonso.
Oh, look at this now. 29 people in the room. We love it.
Exciting stuff going on for sure. We are very excited about the fund and what's to come. I'm just going to take you guys through a presentation as well, just to talk about the passive income blueprint. I'm sure most people want to earn more and work less, and that's what this is all about, is making money while you sleep. That's sort of the concept. Alfonso already touched on this, that this presentation is for discussion purposes only. Um, so the passive income blueprint, some of the key topics we'll talk about is what is passive investing, why multifamily real estate, the Expand Wealth Fund blueprint, and we'll share some real returns and case studies as well, and talk about some next steps. So, the challenge is what for most people is why most people struggle to grow their wealth. There's a few reasons here. There's the stock market. I've been investing in the stock market for over 30 years, and my stock market returns sort of go up and down, sort of like a yo-yo. And there's no compounding, because as soon as things are going well, something happens in the market that's uncorrelated to the actual company. For example, what's happening right now with Trump with the tariffs. If he says something about the tariffs going up, the stock market just drops, and it doesn't matter which company you're invested in. On savings accounts and GICs are now back below 3%. You're getting very low returns, which is barely cutting inflation. People want to invest into real estate, but what most people look at is single family homes, condos, very small buildings, which are not cash flowing. You don't get the benefit of the lower interest rates for the larger buildings. Um, and then the lack of access to quality deals. So when you're looking for deal investing with a professional group, they're looking at 100 deals and investing in one deal. And they have access to a lot of off-market deals. So what if you could just snap your fingers and grow your wealth and invest in real estate without being a landlord. So you don't have to deal with tenant calls, you don't have to deal with renovations, contractors, the scope of work, the details of buying the appliances. We're just going through this in one of our properties. We're buying appliances, we're buying the mini splits, we're looking at the kitchen drawings, we're going for the flooring, the painting, all the way down to the plumbing fixtures. But this is all stuff that we do day in, day out. We have a system for it, we have a process for it. So what if you could do this with no guesswork and just consistent returns and the peace of mind? So what is passive real estate investing? So you can invest your capital and let the professionals do all the work. So what the way a fund works is you actually own a portion of the property. You own a share in the asset. You're not loaning your money. This is secured lending. You get paid through the cash flow and the appreciation. And this is tax efficient in the sense that you get the benefits of depreciation. You get the capital gains treatment on your income, and basically your distributions are considered a return of capital. So, for example, if you invested $100,000 and you invested it into the fund, as you get the distributions, they're considered a return of capital, essentially. So you don't pay any tax on that. So getting to why multifamily, Alfonso already touched on this, but basically it's like the Costco effect. You're buying units at a much lower cost. You are essentially getting higher income for a lower price. It's like shopping at Costco versus Longo's, where you're buying in bulk. You're getting lower vacancy rates. So essentially what happens with lower vacancy rates is if you have a 20 unit building, one unit is vacant, your vacancy rate is 5%. If you're buying a single family home or a condo that's vacant for 3 months, your vacancy rate for the 3 months is 100%. One of the things we do with the buildings is we also improve the buildings, we optimize the buildings, we reduce the cost structure, so we force the appreciation in the building. So that's based on our value add strategy. And the last piece is that with real estate, it's a stable asset in the sense that with multifamily, especially, the value is based on the income. So over the last couple of years in Ontario, the condo market dropped about 20%, single family homes dropped about 20%, but multifamily real estate stayed stable because the value of the property is based on the income of the property, and the income is based on the rents. And if you look at the rent graph over the past 30 years, it's relatively stable. Sometimes the rent might flatten out a little bit, but there's a constant upward trend, and therefore multifamily properties are increasing in value every single year. And there are four ways to actually win in with multifamily properties. So there's the cash flow piece of it. Every month you're paying down the mortgage, so you're building your equity. As the rents go up, you have the passive appreciation, which is a good chunk of the profit. And yeah, number four, which was what we call as active appreciation or forced appreciation, where we optimize the building through renovations and cost optimization. So you gain every single month from all four of these elements. And here's an example of the compounding effect of multifamily properties. So if you look at this graph, this is based on an example of $1 million. I mean, most people don't have $1 million to invest, but this is why we pool the money and we buy an asset worth 4 million or $10 million. And if you look at this, you put only 25% down. And so with $1 million, you can buy a $4 million asset. If you look at the profit over the years, the passive appreciation is a good chunk of it, and then you get the active appreciation, the mortgage pay down, and the cash flow. So over a course of 10 years, you're looking at this graph, the profit is almost $3 million. So the $1 million investment drove a profit of almost $3 million over 10 years, based on these assumptions, the 4% growth rate and a 4.25% mortgage rate. So one of the reasons we love multifamily is even in 2008, where I personally lost a lot of money in the stock market, private apartment REITs still went up. Even bonds, which are normally relatively stable, went down 38%. Canadian equities were down 30%. So if you invested $100,000 in the Canadian bond market, you would be left with around $60,000. Whereas if you had invested in Canadian apartment REITs, you would be up to $106,000. That's a huge difference, and that money will just compound for years to come. So how expand wealth maximize return? So, our deal sourcing, we have a lot of contacts. Alfonso has been investing for over 20 years. We target off-market deals. We target cash flowing properties in thriving areas. We have properties in multiple provinces across Canada. We know we have boots on the ground there. We know what's happening in these markets. A big part of it is the operational excellence. We have proven systems, proven processes, and people that are driving these systems and processes that know what they're doing. And the last piece is as I mentioned, we renovate the properties. We do the right renovations for the right prices. We get bulk discounts. Recently, we bought a kitchen for $3,500. Even this is 2 weeks ago in one of our properties in Peterborough. And then we also reposition the tenants. We're very careful with the tenants that we bring on. We're very careful with the long-term rent strategy and the cost optimization as well. So our three-step investing blueprint. So basically, if you'd like to invest in something that's stable, that's backed up by multifamily where you own equity in the deal, three-step process is very simple. You connect, book a discovery call, you commit, you review the investment opportunity and sign the documents. And they're standard documents. You guys probably know this, but real estate funds, it's a mutual fund. It's called a mutual fund trust. It's regulated, it's audited, and there are standard documents and regulations that we have to meet. And step three is the best part. You get the regular updates and you enjoy the income and the distributions and build long-term wealth without the hassle. So this is our 10-step acquisition process. I won't go over all the details of the process, but before we get any deal, we have a 10-step acquisition process. You'll sort of notice that we even have contractor quotes as part of our process. So we even know what we're going to be paying the contractors before securing the deal in terms of renovations and improvements. We look at 100 deals. We might analyze 30, might offer on 10, and got one asset. This is typically our ratio for securing deals. So we're very picky about getting the right opportunity. We also have our power team set up from real estate agents to the contractors to the mortgage brokers, appraisers, lawyers, and accountants. And one of the most important things is your property management team. So Alfonso has his own property management company. So if the deal is close to the Ottawa area, his team will be managing that deal, helping manage that deal. And if it's in different provinces, we already have our property management team set up in those provinces that are managing the properties today that we own. We also have our 20-point renovation system. So from contractor management to the exterior renovations, including landscaping, the driveway, painting the lines, numbering the spots. And then we have a detailed list for the interior renovations. I'll show you a picture on the next slide, but essentially what we do is this is an actual unit that we renovated. We put in a mini split in the back wall, put independent lighting. We took down the wall between the kitchen and the living room, so it's an open concept, added a breakfast bar. There's a quartz countertop with a quartz backsplash in this unit, vinyl plank flooring, which is durable and water resistant. We even changed the windows in this building. We changed the roof. And this building has doubled in value since we purchased it a few years ago. Our asset selection criteria is very stringent as well. We look at new and value add properties. We look for economies of scale where we're buying 30 to 100 unit properties that are positive cash flow, very selective on the area that we're buying in. And we're buying across Canada. So, all the yellow areas are where we actually own properties. but our three focus provinces are Alberta, Ontario, and New Brunswick. These are thriving markets, all thriving markets. Vacancy rates are hovering around 3%. And if you look at the Canadian landscape, Canada is one of the only countries to ban to have a foreign buyer's tax, a non-resident tax. We've also limited the number of foreign students. Put a cap on the immigration policies temporarily, and so they actually had to shut down the floodgates in order to contain the housing crisis right now. We simply can't build fast enough, although there is a lot of condos out there, but at the same time, there is a housing shortage overall still in the market, and that's why these restraints are in place still. Here's an example of a deal that we did, an actual deal. So this is a bit of a case study on a deal in Fredericton that we did. So this is a deal that was purchased in 2022, where the mortgage rates were high, the prices were still relatively high. We were able to find this property off market. We got CMHC financing on the deal at 4.75%. If you look at the price of the property, 2.6 million. 16 units have been renovated already, and now actually, since we developed the slide, it's actually 18 units have been renovated. And the total cost was 3.5 million, including renovations. The current market value is actually 5.2 million since we renovated those two suites. And the profit is approximately $1.5 million within 2 years. The investment for this deal was under $1 million, and the profit is $1.5 million. So getting back to Expand Wealth, if you compare Expand Wealth versus do-it-yourself real estate or versus stocks, you'll see that Expand Wealth sort of checks all the boxes. When you look at do-it-yourself real estate, it's not passive. You have to do the work. You have to take care of the property. It's definitely not stress-free. You might have to deal with tenant calls, have to deal with issues with the property. You have to secure the mortgage, uh, deal with the renovations, the contractors, things like that. I actually met with a friend a couple of weeks ago where he bought a duplex in Hamilton, wanted to convert it to a fourplex. Spent $100,000 on the permits and the architectural drawings, got the approval. And when he runs the numbers on it now, it's negative cash flow because he didn't do his numbers properly to begin with. So he paid too much for the property, and now he's just gonna have to rent it out as a duplex and be negative cash flow until the market improves. If you look at the stock market, it's it's not passive income. It's not backed by a hard asset. It can fluctuate based on what Elon Musk might say or what Trump might say or by different factors. And even if you buy a really good company, you'll notice there's something called market correlation. So you'll notice that like on a given day, there's red across 80% of the stock market, right? It's not because that company went down. It's because the stock market correlation, the entire market goes down because of the fear in the market. In stock market, you have no control. You can't walk through the company. You can't ask questions. You're a passive investor completely. And it can be stress-free as long as the stocks are going up. When they drop 20% one day, it can be a little bit stressful. So who is this for? So a REIT is a perfect investment vehicle for busy professionals. So whether you're a doctor, lawyer, accountant, whether you're a business owner who has a different type of business, so that's your expertise, so you can focus on that expertise and let somebody else focus on the real estate side of things. It's great for retirees looking for a stable income because multifamily is one of the most stable assets. Even if you go into ChatGPT and you ask what's the safest type of real estate to invest in, it will tell you multifamily real estate, and that's one of the reasons we picked multifamily real estate. And anyone that's tired of market uncertainty and wants to hedge their money against inflation, as Alfonso mentioned earlier, there will be inflation in the market with tariffs, the prices going up, and your GICs are giving you below 3% now. So that's the rate of inflation essentially. So hard assets are great in times of inflation. So if you look at the investment side of things, if you were to invest $100,000 in the stock market versus in a REIT, you'll see that at 8%, the average return for the stock market, your $100,000 in 5 years would profit about 46.9K, whereas a REIT such as Expand Wealth, where we're targeting between 11 and 15%, so we took a midpoint of 13%, you would profit $84,000. And what's sort of not factored in here is that REITs have distributions that are typically considered return of capital, which is tax-free. So that $84,000 would be tax-free back to you, whereas the $46,000 would be taxable. So, I'll just go briefly over this in terms of how REITs work. So the way REITs work is we raise capital, we acquire the building with that capital. At that point, what happens is there's monthly cash flow, and we're building equity through paying down the mortgage. We're also optimizing the property through renovations, through cost reductions, through tenant turnover, and getting the right tenants in the property. As the property appreciates, you're building even more equity and even more cash flow. And then a few years down the road, we refinance the property or we sell the property and get a large payout. So our mission, Expands Wealth mission, is to be the #1 multifamily REIT in Canada by delivering long-term wealth creation through simple investments, while creating a meaningful impact to communities. This is one of the reasons why we're doing this, is we want to create a meaningful impact. Alfonso is already taking 11 vacations a year. I'm not quite taking 11 vacations a year, but so he's doing this. He's doing a lot of charitable, he's part of a lot of charitable causes. And this is one of the reasons why we want to do this, is so we can also give more. Our leadership team, Alfonso already touched on this, over $100 million, $150 million in assets under management. We're a 50% female-led team as well. And there are people on the team with high credentials, people on the team that have studied at Harvard. We are a team with a proven track record, and that is why we selected the team that we did. 100 years of experience and consistent double-digit returns, and many of our investors are repeat investors as well. So a lot of our investors, when we refinance a property, they invest the money back with us, and Alfonso has that track record as well. And everything we do, our core values play into it. Our core values are responsibility, excellence, impact is a big one that I talked about, and trust. Every decision we make, everything we do, these are our core values that we stand behind. And our philosophy and our why, the reason we do this is so we can actually give more back. And that is our long-term vision. These are actually pictures from charities that we support. At the bottom right, there's a well that was built by us. There's a school that we're funding a few classrooms in the school on the bottom left side. On the top left, Alfonso, my kids have actually attended this Quadra Youth Foundation event, and my sons have done very well after they attended that. They were motivated, so thank you, Alfonso. And in the middle, there's a Freedom Tree. I think some of you must have heard of Freedom Tree. They were at the last Expand conference as well, and Alfonso was helping them raise some funds there as well. So these are some of the causes that we're very passionate about, and we want to give more to these causes. On the bottom left, that's called the Citizens Foundation. We're in talks with them to actually fund an entire school, and that'll support about 250 kids. So what makes Expand Wealth different? We have a national investment scope. So a lot of funds might focus on Ontario or certain provinces. We have a national investment scope, so across Canada. As I mentioned, very experienced, educated leadership team, 50% female-led. And we will have annual property tours when you can actually learn more about real estate if you'd like to, but you'll actually get to feel and touch the assets that you are investing in. And we did a similar tour last year with a bus full of people as well. And Alfonso shared some of these pictures. These are some of the assets that the management team owns. And some of these are very nice, lean and clean buildings. We also do a great value add strategy, but these are some of the lean and clean ones. And we have opportunities like this that we're looking at for the fund. In fact, one of them is right beside this building. This is an Expand Wealth prospect that we've been in negotiations with. And this is, I'm not going to disclose details on the exact city and things like that, but the debt is at 2.4%. The cap rate is over 4.5%. So right away you get positive cash flow. It's proximity to universities and hospitals. So there are a lot of off-market deals that through our network we have access to, and right now we're finding it's a great time to buy as well. So we're launching at the right time. So about the opportunity, so $100 per share, 11 to 15% targeted return annually, and the minimum investment is $25,000. And there's a quarterly dividend reinvestment plan as well. So you can get cash quarterly, or you can reinvest your dividends for faster compounding as well. As part of the documents, it'll ask you if you want to get into the DRIP program or get quarterly cash distributions. And Alfonso already stole my thunder on this, but the profit split is 80-20. So investors,
Unbelievable. Unbelievable.
yeah, we've never done this before either. We always do a 50-50, sometimes a 60-40. But because of the economies of scale, we're able to do 80% for the investors. And this is why we want to be the number one REIT in Canada that's investor focused. And you can invest your RSPs, TFSAs, and RESPs into Expand Wealth. And a lot of our family members have already invested into Expand Wealth. So final thoughts. So Expand Wealth, you get passive investing, which is one of the smarter ways to invest. You saw Alfonso's slide on where the wealthy are investing, and more they're investing in REITs. You get access to us, you get access to your properties, you get expertise, you get peace of mind, and you can earn income while you sleep. So what's very exciting is you are now in a position to be part of the first 150 investors still. Um, that's called we're calling that the Founders Club, and you'll get the Founders 150 pin. You'll be invited to a Founders 150 Club networking dinner, where you'll have other investors there, so you can network with them. You can exchange ideas, exchange different ways that they're passively investing. Some of the investors, are very savvy investors that are investing with us, and you will get access to property tours as well. You'll get priority access to property tours. So very exciting. We're super excited with some of the deals that we've been looking at as well. And if you're ready to invest, you can email Denise at expandwealthfund.com. Or if you'd like to book a discovery call, you can scan the QR code, or you can even email Denise if you'd like to book a discovery call, whatever you prefer. But the QR code will take you to a Calendly invite from Denise, and if you'd like to just email her and set up a time, that's fine too. So Denise at expandwealthfund.com. We're going to open it up in a minute for questions, but these are our partners. So, these are all reputable companies that have expertise in funds, specifically REITs. And we are working with these companies closely to make this a huge success. So, any questions? Alfonso, anything
I've
you
been
want to
answering
share?
some of I've been answering some of the questions as they've come in.
Okay, great.
People are asking where I build, and like I I'm building anywhere across Canada. But the thing about the fund is that we're actually not doing any land development in the fund. We are buying existing properties, the newer the better. So they could be brand new apartment buildings, but we are not doing the building. We want to keep things very low risk, and of course, in land development and investments like that, there's always a risk factor, delays, you know, uh, let's say permitting and things like that, and we personally will take on those risks, but within the fund itself, we're actually buying existing properties. So you want to speak to that, Sim?
Yeah, I just want to add that land development, especially now, if you look at some of the funds that are out there and some of the opportunities that are out there, and then we have a lot of friends in land development as well, and they've been sitting on their land for a few years now, and they're not even building yet. They might have the build timeline might be 7 to 10 years. So we don't want to, for this fund, we want cash flow, we want appreciation through renovations and optimization and excellent management. We are not getting into land development where we're tying up people's capital for many, many years. So we're trying to do a cash flow based fund.
Someone's talking about Wealth Genius. Um, you know, uh, the difference between Expanding Wealth and Wealth Genius. I think it's who's asking Vanessa. These are complete different things. In Wealth Genius, we uh, we educate you on how to be active in real estate. This is all passive, so it's a completely different thing here. Two completely different things. So this is more on your registered funds, and I think someone asked a question. Um, uh, it's RSP eligible. Yes, this is, you know, this works best for people. Everybody's got all these registered funds. I don't know how many billions of dollars in registered funds are sitting there. And primarily, what people do is they put their money in these registered accounts, RSPs, RESPs, tax-free savings accounts, and they basically put that money there to die, because the vehicles that are available, and if you go to your banker, they're going to say, oh, you can only invest into these mutual funds, and basically it's just pretty much more of their products. Again, I'm not an advisor. I'm not trying to advise you to do anything, but you're investing directly into real estate. And it's a great place to put your registered funds. Sid?
No, I think it's one of the best places to invest. It's regulated, it's diversified, and you get to invest in the economies of scale. So we're able to buy properties that are, 10, $20 million. And even wealthy people, we know people with in family offices that have tens of millions of dollars in wealth. But even them, like they'll invest in a REIT because they don't want to put $5 million into one building.
Yeah.
They might want to put a $500,000 into one building. So this is a great way to invest and get the economies of scale and get the expertise and to get the cash flow.
Can we throw up the QR code there again, and maybe we'll plug in the email in the chat box as well. Someone's asking about the QR code.
Yeah, I just put it in there. If I just put in the QR code. I think it works from the
Okay,
Zoom
okay,
chat as
good.
well.
Oh,
Yeah,
that's
yeah,
great. Yeah, that's what I wanted to do.
yeah. I think
Excellent.
Nelson was asking for the QR code. If you let me know if it works, Nelson. If it doesn't work, just let me know.
Yeah.
But it should work.
Okay, great, great.
And yeah, I just want to add to that that Expand Wealth is an investment, which is very different. So instead of like I'm going to Vanessa's question about Wealth Genius versus Expand Wealth. Wealth Genius will give you exposure into growing your wealth in general. Expand Wealth is a specific place to put your money instead of the stock market, or instead of some GICs, for example, or instead of just cash sitting there. Some people actually have cash sitting there, which is devaluing every year, which is one of the worst things you could do. So, Wealth Genius is if you want to grow your wealth across the board and you want to know where to invest broadly. But Expand Wealth is like instead of buying a stock or a GIC. So I hope that helps.
Someone's talking about transferring their money to a trust company where they have to pay a yearly fee to that company. And and we're gonna guide you through this process. Of course, we'll have the opportunity to show you the people that we work with. You can transfer your funds into their account, and yes, there is a fee. Um, but just like you pay fees at the bank for them to hold your money, and this is just kind of they're facilitating the transaction, so they're going to charge a fee. But what do you say to that, Sid?
Yeah, I think the fees are nominal. It's almost like sometimes if you spend $200 to make to $10,000, is it worth it? Of course, it's worth it, right? Because it's one of those things where there is a small fee for the trust company, but it's absolutely worth it. And our goal is to try and double your money like over the years, right? So a fee of a couple $100 a year, 150. I think it's like 150, give or take,
Yeah.
plus HST. Um, but yeah, it's absolutely worth it. It's a no-brainer.
Beautiful. So we put all the information in the chat. Book a call. Because we are on a roll. There's several different assets that we're looking at, including one that's going to be right beside that building where we took that picture. We didn't even know that the land beside it was going to be building, and then now we're actually negotiating to purchase that building once it's built. Really exciting stuff, exciting times. These are the best of times. And guys, I want to thank you guys for coming by tonight. People, were tuning in from Langley, all across Canada. That's really exciting. So thank you, Sib, Ed, and everybody else who tuned in. I'm going to stop the recording.